I think just from a sort of the apples and apples comparison, taxation of dividends, taxation of capital gains, short-term capital gains, long-term capital gains, I mean, that's I don't think people realize until they're in the cross-border situation. The capital gains treatment in Canada versus the U.S. I mean, they don't understand that, say, U.S. capital gains taxation and how it works here. Canadians do not realize the value of no short-term, long-term capital gains. Unless it's used excessively, and the CRA labels
you a trader.
Deems you a trader. They're quite liberal in their interpretation of capital gains.
But Canada has a major problem, and that's the fact is that if you pay a U.S. capital gains tax, you pay 15% on long term. You pay 15% of whatever it is, right?
Yeah.
And if you pay the full tax because it's a short-term capital gain, it doesn't matter whether you pay the 15% or the full tax. Canada says, well, we only tax 50% of the capital gain.
Yeah.
They will only allow 50% of the
Right.
profit. Now, here's my point. If you had a $100,000 capital gain, you cut it down to 50. If you've got another $100,000 worth of income, effectively that 50 is being taxed at 44, 42%. So you got 40% tax on $50,000, which is $20,000. The States takes the same $100,000 and says you don't have to pay any more than 15% tax on it, which is $15,000. So Canada's taxing $20,000 instead of 15, and then only gives you half of the 15, $7,500. So you end up paying $27,500. You end up paying $27,500. And I mean, I've taken exchange out of it, and that is not fair.
That's right.
Canada should allow, because when the law was passed about what you got, the States was only taxing 50% of the capital gain too at regular rates, and Canada was taxing 50% at regular rates, but they're not doing that anymore.
Now, is this a law or is it an interpretation? Because if it's an interpretation, you can go after it.
What's on the form?
Well, but that you and I both know that if it's on the form doesn't mean that it's in the law.
I fought it at least a dozen times, and I haven't won yet, and I haven't had anybody that wants to take it to, and I'm not in the position to take it to the Supreme Court.
Well, we may have a readjustment in terms of U.S. taxation levels on dividends pretty soon anyway.
Yeah.
Right? So it may, no question it's going up.
You're going to stick around for a little bit longer? Because our hour's up, but I think
Oh,
we've
is
got
it?
more stuff
Well,
to talk about.
we've got another 5 minutes anyway.
5 minutes, we'll wrap it up.
I want him to stick around because I've got a couple of questions for him.
Okay, well then why don't you ask your questions, because I'm going to come back.
Well, I want to change the subject a little bit. You mentioned a couple of sessions ago that you're dealing with foundations and investing their the proceeds from donations and things like that. Give me a little bit of an idea of what you're doing and the kinds of things that that make sense for a foundation that's got both a Canadian and a U.S. Presence.
Well, one of the ways we can assist with foundations, obviously we're in the investment management business. So foundation has, for example, one of the problems for smaller institutions, say a small foundation with $5 or $10 million, is to get somebody to manage the assets for them with a focus on them as a client, as opposed to just taking their $5 or $10 million and lobbing it into a large pool of $500 million where they're, managed institutionally, but they're kind of it's like a super mutual fund. And smaller institutions that may have funding requirements and need a cash flow structuring where they say we need extra, $20,000 a month for these kinds of obligations, or balloon payments twice a year for these things, or whatever. Anyways, so we customize or can customize an investment policy at their level for them, so they're not part of a large organization and kind of lost in the thing. As part of the sort of thing we'll do to assist the foundation is, in Canada and the United States, recently in Canada has improved the charitable deduction rules to the point where it's actually a positive cash carry if you make a deduction. You're actually getting paid to make the contribution. So what we will do, for example, with a registered charity or foundation, is help them if they have a client who has, say, some Royal Bank stock that they got at $10 and has a large capital gain in it. We can make that we can help the client out in claiming
Well, you can take the stock
Right.
itself.
Take the
we
stock
take the
as opposed to
stock
making
without
them
having
liquidate
to-
it and then give the
Right.
money. That's right.
And
Yep.
so it works out as a benefit to the individual donor
And to the charity. Yep.
So we basically, what we do is we set up an account for the donor. We take the stock in, we'll transfer it in, say it's sitting at some brokerage company, and well, let's take 1,000 shares of Royal Bank. 1,000 shares of Royal Bank at a regular brokerage, full commission, probably I don't know, $700 or $800 to sell. So we can set up an account for the charity. We set up an account for the individual. Obviously, we're looking to the individual for more business. It's
Yes.
a bit of a business lead-in. But we'll settle on our platform for, rather than $700 in commission, our institutional rate for 1,000 Royal Bank would be $19.
Can't complain about that.
Yeah, well, the foundation gets more money.
That's
that
right.
way.
Right.
Yeah.
And let's
So-
explain that part about it, because just for the record, if you have a stock that you bought for 10 and you sell it for 100, you have to report a capital gain of
Oh.
$90, which is $45 taxable. So you would owe tax, depending on your tax rate, of anywhere from 25 to 45%. So you'd owe someplace between $10, $12, and $20 of tax
Per share.
per share.
Yep.
But if you give the share physically to the charity, there is no capital gains tax. You give them the share, you get a receipt for $100, and
You get a receipt
don't-
for the value of the share at the time you give it
That's
to the
right.
charity.
You get the receipt for $100.
Yep.
The charity gets $100. They can arrange to sell it for the nine cents or whatever it is, and you get a tax deduction of your $100, which is usually good for $450 or $45, and you don't have to pay the $24 or $25 tax that you would have had to pay if you'd sold the share yourself.
right.
So it's a win-win situation. The charity gets more money because you can give them more money, and you pay less tax because you gave them the share instead of selling
I think
it
this is a
first.
wonderful way for
Yep.
wealthy individuals to support charities. I mean,
Yep.
it's one of the things I think the government's done is right. Mind you, a lot of these charitable donation things have been badly abused.
Well, tell me
right?
about it, yeah.
But I mean, and used legitimately for legitimate charities, this is a fantastic mechanism, and I think a great way for, as part of an estate issue, or pre-planning an estate distribution issue, or funding has been cut back dramatically for the arts in Canada
Yeah.
here, well, in the United States too, right? So if you want to support your favorite charity, whether it's a health-related charity or whether it's an arts-related charity or whatever, I think this is a fantastic way to do it.
How about eagles hatching the nests?
Is it a registered charity?
Absolutely.
Yep, that's
There's method to my madness.
that's why Richard's
It's
asking
not.
about it.
It's not yet been formally announced, but I'm now the executive director of Hancock Wildlife Foundation.
Oh, excellent! Congratulations.
So this is
ones
one of the things
Well,
that
this is one of the things you could do.
this is one of the things that has to be done.
Yeah. So,
Yes.
so with your wealthy patrons and so forth, I mean, basically, once the account's set up for the foundation or the charity, say
Yep.
with us, we handle all the details.
Yep.
So if somebody wants to make a donation, you just say, call Seabank Capital. We sign them up.
Yep.
We process all the paper. We make sure the money goes into the foundation's accounts, and so forth and so on.
it's
So
done.
all that's handled. So for you.
And strangely enough, the foundation so far is over on Zero Avenue, not that far from your office.
Perfect. Perfect. So yeah, it's we've got all kinds of details we can provide you with if you're interested. But yeah, it's a great program.
So you're sort of a do everything guy.
Well, in the solutions business, David, it's not just the money management, and that's what's so interesting about it. As you know, I spent almost 25 years as in the brokerage business, being
Yeah.
a manager and so forth, primarily domestically in Canada with some U.S. exposure, but it's a heck of a lot more interesting these days.
Well, I'm going to go to a couple of questions that we've got here, and I'm going to invite anybody, if you happen to be logged on now and you have a question. It's really funny, this thing, because sometimes we've had 5 questions some weeks, and other weeks we get nothing.
Yeah.
But I do.
Well, I think it's the Olympics right now.
Oh, the
Yep.
Olympics are killing everything, I
Sure.
think, right
Oh, there's
now.
a hockey game on tonight, isn't there?
Yeah.
Yeah, the Sedines are playing. It's
so
not. They're
we'll-
not Canadians tonight, though.
Is that right?
Yep.
Anyway, I got let's see, this is Robert Kennedy Jr. Robert F. Kennedy Jr. I just read Ted Kennedy's book and found it really good. Where are the papers I'm looking for the question? It's about a TFSA. And I'll bet you don't handle a single TFSA, right?
We do.
You do? Why would you handle TFSAs at $5,000 a year?
Because we have clients who have existing business with us, and they call up and says,
Say, I want a TFSA.
I want a TSFA, and I one for my wife and one for me, and take 10,000 out of 5,000 out of our regular accounts and set us up a little TSFA. So yes.
Does it really help them? That's the question in that
Well,
particular
it's not a significant
instance.
amount to start with. I mean,
Yeah.
but yeah, we do it with a no fee no fee TSFA, and we just how we do it is we kind of manage it as part of the overall portfolio. So if it's just another account, so we'll just put a security in it, right? But it's part of the overall portfolio umbrella. Just happens to be an account off the side. That's all.